This is the end of my journey with Kanga Trends. Yes, you heard that right. A journey that lasted 68 weeks is now coming to an end. Do you want to know what's next? And of course, what's next for Bitcoin? Let's get started. Hey, welcome to another episode of Crypto Market Analysis. For me, this one is very special, the 68. Why is it special? Because most likely this is my last appearance in front of the Kanga cameras. Until now, for exactly 68 weeks, we've been meeting here to analyze Bitcoin, Ethereum, and the Sol coin chosen by you. We met and took a look at the charts from 3 and at times even 4 different perspectives. Currently, these are technical, on-chain, and fire charts. All of this meant that the condensed analytical knowledge we served up here simply couldn't be found anywhere else on the web. Absolutely nowhere. You showed your appreciation through the number of subs that came in under these videos. I'm truly extremely grateful for what I witnessed. I never expected that Kanga Trends with me as the host would become so popular. And of course, I'll say a bit more about this after the Bitcoin analysis, but before we get to Bitcoin, remember that the content in this material is still not investment advice. For advice, consult a licensed advisor or just do what I do, conduct your own research. If you acknowledge this, grab your coffee and let's dive into Bitcoin here for the last time. And on the Bitcoin chart, there are spectacular drops, but if you follow me on Twitter, you knew they were coming. Why? Because on Monday, I posted this tweet, which you can see right now on your screens, stating that at the price of 107, almost 700, it was most likely that Bitcoin was about to drop, attention, to $98,000. And those levels have just been reached. What was the reason for this? Well, first of all, in recent days, a head and shoulders pattern has formed on the Bitcoin chart. However, this is a different pattern from the ones we discussed in previous episodes. We also talked about some head and shoulders patterns there, but here we didn't have anything confirmed yet. Now, however, everything is plain as day. I shared this update on my channels. And look, here on the chart, we can see the left shoulder, the head, and the right shoulder. Here too, the breakout happened very nicely, in quotation marks, of course. The 200-day moving average was also broken through. All of this caused the drop below the 200-day moving average, combined with declining volumes related to the pattern to indicate that Bitcoin, considering the structure of the formation, is targeting 98,000. Additionally, the RSI also clearly indicated that in this case, the 50 level is acting as resistance, which could result in an even deeper downward movement. Was 98,000 reached? Around 98, yes, not exactly, but Bitcoin can still experience a decline here. However, at the moment, it's rebounding, and it's worth noting that structurally this is happening from a very significant level because the lows that have now been reached, which were reached yesterday and have even been confirmed today, coincide with the lows we observed here, that is in June 2025, so basically several months ago. This is a natural support level from which a local rebound is occurring. A rebound should take place here. It's also worth noting what happened here with all the moving averages I mentioned earlier. Earlier, we saw that there was resistance at the 50 and 100 levels. Then once the 200 was broken, it triggered a dramatic and very rapid move downward. Where should we look for support now? Let's start by structurally analyzing what's happening on the chart, and we can see above all that the next support would be this gray box around $91,000, so it's quite deep. But can Bitcoin actually reach that level? There are certain factors suggesting that it might not. One of these factors is the 350-day moving average. It's a very unconventional moving average, but as we've already explained in some previous materials, it's a moving average that, in a way, represents an unwritten boundary between a bull market and a bear market. And attention, it has been breached. Does this mean that Bitcoin is now entering a bear market in this case? In my opinion, not yet, because this is just a breach, not a sustained breakout below. Why? Let's look at what has happened historically. First of all, even right here during the ongoing bull market, Bitcoin already managed to break below the 350-period moving average for a moment and then return above it. The 350-period moving average is a very strong one, so it's no surprise that such a reaction could have happened here. Similarly, though maybe a bit differently, because here we saw rather clean rebounds. This happened in 2024, in April. But it's worth noting how Bitcoin behaved in other instances in relation to the 350-day moving average. And now pay attention, this is a very important moment in Bitcoin's history. The previous bull market and the double tops. During the summer period, and in fact here we see July, the 350-day moving average was also breached. It even happened twice. Here, for a moment, it was actually intraday trading that broke below and then returned above the 350-day moving average. But here, we had a very clear breakout. Even the price stayed below the moving average for 3 to 4 days before returning above it. That's why I expect that in this case, we might see a very similar pattern, meaning Bitcoin could once again defend this level of the 350-day moving average. What else supports this? Let's check other indicators. A key indicator for me at this moment is, of course, the RSI. The RSI is dropping very, very low, very deep. It's diving to levels that haven't been seen in a long time, and these are levels from which we haven't really seen any rebounds, not even since March 2025. Maybe I'll scroll the chart a bit so you can see it. Well, here were the deepest lows in March 2025, so really this is, I would even say it was in February. So these are really distant times, but at the same time, it's worth changing the interval and looking at what's happening on the weekly chart. And on the weekly chart, there's also a breakout happening here, a breakout into certain areas that until now had served as support. We can see that here the bounces on the RSI were exactly around 45, here, and probably another one will appear here. Why probably? It doesn't have to happen here. Let me remind you once again, something I actually mentioned in the previous episode, that with the RSI, we refer primarily to the closing price. So unfortunately, Bitcoin would have to maintain its current value, the one we're observing now, in order for the RSI to close at this level on Sunday at midnight UTC, which would give us a stronger signal for a potential upward bounce. Let me remind you, we're talking here about the weekly time frame. So going back to the daily chart, let's take another look. The 350-day moving average has been broken. Where should we expect potential resistance if Bitcoin bounces back? Well, after such a breakdown, the natural resistance levels now would be at $105,000, $107,000, $110,000, and $112,000. These are the areas, the values that I'm watching. In a moment, we'll also check how they look on fire charts, meaning we'll make sure exactly where the buy and sell orders are located. And of course, it's worth paying attention once again to the 200-day moving average, which currently is reaching the level of $110,000. There could be stronger resistance here in the case of a stronger rebound. I'm browsing various YouTube channels as well as following certain analysts on Twitter, and I noticed that the sentiment is changing. The sentiment that once spoke of a super cycle now suggests that we are actually experiencing the end of the bull market. Why? Well, it's because of the calendar, among other things, and the fact that in this case, the bull market should end precisely in October of this year. Time itself is, above all, also a technical indicator. And indeed, if we consider only this factor, we might assume that a decline will actually occur at this point, that this is the end of the cycle, and basically there won't be anything left to collect for the next year. But at the same time, it's worth asking yourself whether this isn't just an impression that the big players want to create for us. That precisely at this moment, since at least half the market, or maybe even more, assumes that this is the end of the cycle, it's worth triggering a series of declines in order to buy back Bitcoin lower and cheaper, and then wait for the price to rise and sell it higher. So I'll leave you with that thought, and let's move on to fire charts. Let me remind you once again what fire charts are. In front of us, we have a certain blue line, which here represents the price of Bitcoin, and we can see some horizontal lines. These horizontal lines represent buy volumes if they are below our blue line and sell volumes if they are above. The brighter they are, the stronger these volumes are. And we can see that currently, below the current price of Bitcoin, under $100,000, there are plenty of buy clusters. They are distributed very evenly, basically every few dozen dollars, so it's quite dense, with this layering continuing all the way down to around $85,000. Can the price drop there? Of course, it always can, although I don't expect that to happen in the short term. I am constantly monitoring the 350-day moving average, and I expect that a rebound could occur here. The rebound, in turn, could be quite strong because we don't actually see that many sell orders from the current price level. Up to $110,000, there are basically almost none at all. So here, if demand appears, prices could actually rise quite dynamically. But is it appearing? Well, let's take a look at the CVD, and right away we can see that there are two lines here that stand out from the rest. The brown line, which represents whale wallets, that is, those holding between $1 million and $10 million, shows that they are buying Bitcoin at this moment. This line is rising, which means the appetite for buying is still ongoing. And right next to this line is the orange line, which has also been rising very steadily, basically since November 1st. So for the 5th day in a row now, and it really looks quite impressive. Attention, this orange line represents retail investors, meaning those wallets that hold between $100 and $1,000. And interestingly, they are currently behaving like smart money, basically buying when the whales are buying. Whales. It looks pretty good. We can see that the other wallets have started to wake up over the past several hours and are also rising slightly, so they too are seeing the current value of Bitcoin as a buying opportunity. So what's next for Kanga trends? Well, it seems that this is my last appearance in front of the Kanga cameras, so I would like to sincerely thank you for this wonderful adventure we've shared, for the hours we've spent together analyzing. Will the Kanga Trends project continue with a new host? Unfortunately, I don't know that. We'll probably find out as soon as next week. As for me, I want to let you know that I'm definitely not disappearing from the crypto space, and I will certainly continue to share my analyses on my Twitter. And in fact, I promised you that a long time ago. I feel obliged to remind you of this once again. I've mentioned many times that I would talk about current analyses as well as critical deviation indicators, especially now when we're so close to the moment where we're wondering whether this is the end of the bull market or actually a super cycle. I'll be talking about this a lot on my Twitter and maybe someday somewhere else as well. So maybe we'll see each other again somewhere. So let's move on to Ethereum. And in the case of Ethereum, much of what we talked about last week has come true. First of all, I pointed out that Ethereum is around the 50-day and 100-day moving averages. These are our red and yellow lines up here, which served as resistance. I pointed out that even though Ethereum still has the potential for a very strong breakout, possibly toward its all-time high, this is not a buying moment because here I expect a price pullback. As it turned out, due to an additional RSI divergence that we saw here, Ethereum did indeed fall. I was expecting a drop to 3,500, but it turned out to be even deeper. And as it turns out, Ethereum broke through the 200-day moving average, that's the upper green line we see here, and also touched the 350-day moving average, dropping to around the area of this gray box that we've been observing for a long time. I'll extend it a bit wider now. And this is the support that stretches from the value of 3,000. And this, mind you, is an extremely important support level for Ethereum. Why? Because this area has repeatedly acted as resistance. Here as well, it was resistance before, and at times even earlier in its history, it also served as support. So in my opinion, a bounce from this gray box is very justified. Where will Ethereum head in the event of such a stronger rebound? Well, I expect that 3,500 must be reached, at least touched from below. If this level is broken, then I expect a move towards 4,000. 4,000 where, note, in this area, the moving averages appear again. The red line, which is the 50-period moving average, is turning right towards 4,000. The yellow line, which is the 100-period moving average, is moving a bit more slowly, but is also making a very similar move. So I expect some resistance in this area. For now, in my opinion, Ethereum is exhausting its downward trend and may actually start moving upwards. No fireworks on Ethereum yet. Here, when it comes to the fireworks themselves, we don't have much information, but the CVD is already telling us quite a lot. Above all, those interested in buying Ethereum are retail investors who recently, perhaps in a rather uneven way, but still, are considering purchases and are actually buying. And red wallets have also appeared here. They are moving in a somewhat uncoordinated manner as well. They were quite high up. In recent days, they have experienced sharp declines, then bought again, then once more became discouraged with the market, and now they are buying again. And these are wallets that hold between $10,000 and $100,000 in their balance. Besides that, other wallets, we can say that they are waking up here. There are also whales here, which is our brown line. I'm moving the cursor along this brown line so you can see how low it is and to distinguish it from the crowd of other lines. And we can see that this line has also been rising for the past several hours. So there is a signal here that Ethereum could actually rebound. It's time for the altcoin section, and this time I'll discuss 3 altcoins, although all of them will be covered briefly. We'll start with Litecoin, which was mentioned in the previous video, where I talked about how this altcoin is struggling with moving averages, facing resistance at the RSI at 50, and could indeed experience declines. And as it turns out, since then, those declines have actually been happening. And currently, Litecoin is also at quite a good buying point because this is a value that coincides with these lows, and we can also assume with these here that there will be quite a few people interested in buying at this level. This downward wick may not have been fully filled yet. Very often, the price simply dives deeper, fills in the gaps like the one we had here because of this wick, and then bounces a bit higher. So here, a slight pullback may still occur, although let's remember that Litecoin is currently at a support level. From this point, it should break upwards, most likely towards the moving averages again. Another cryptocurrency that we've mentioned frequently lately and is worth paying attention to in this episode is Chainlink, which is also dropping very deeply, but it's dropping, notice, to the gray box, which is actually very similar to what we saw with Ethereum. We had a similar situation here, and we can see that a rebound is also occurring here. There is still a bit of room for further drops to around $12 to $13, but even now, Chainlink presents some pretty good buying opportunities, especially since on the RSI, Chainlink is also landing at 30, and from 30, it has often rebounded very nicely. So here, purchases on my part will definitely happen. And one more cryptocurrency, one that I have had in my portfolio for quite some time now, it's Fetch, a cryptocurrency from the AI segment. I'd like to point out something here that is worth looking for on cryptocurrency charts, namely, it's simply divergence. Attention, Fetch is a very specific cryptocurrency considering what has happened in this ecosystem in recent weeks. There was a certain split there, a collaboration between this protocol and other protocols. Nevertheless, we can see that there are people here willing to buy Fetch who are showing very nice interest, as we can see, for example, on the RSI. We can see an extremely strong bullish divergence forming here, which could result in Fetch rebounding soon and soaring towards, well, either the moving averages or this downward trend line that we are observing here, and this line, along with the line we see at the bottom, which is also a downward trend line, but here it acts as support. Together they form a very nice wedge, and this wedge could, in the longer term, be a long-term bullish formation. So from this perspective, in my opinion, Fetch looks like one of those cryptocurrencies, even though it's an altcoin and altcoins are currently suffering a lot, that could soon make a really nice rebound. So it might seem that Fetch looks dramatic on its chart because it's basically in a very long-lasting downtrend. However, it also seems that there are some buying opportunities here, which are further confirmed by fire charts. With fire charts, we might not be able to read that much just by looking at the heat maps themselves. We have some support levels which are located around, as I see here, 18 cents, so quite a bit below the current price, but at the same time, it's worth paying attention to the CBD and what's happening here. We have a purple line, and this purple line represents the second largest group of cryptocurrency wallets. Those that hold in their balance from $100,000 to $1 million, and lately they have been buying Fetch very strongly, very actively. In addition, the red wallets are also active, those that hold from 10,000 to 100,000. Their activity, let's say, has been waking up basically in the last several hours. But still, this activity is present here. So directly, what we see on the technical chart, the divergence that we observe there, matches up with this, with what we are currently seeing on the CVD. And now, a quick look at ETFs. After 4 days of buying, which we discussed last week, there have been several more days, but these have been exclusively days of declines. We can see a direct correlation between what is happening on the price chart and what is happening with the ETFs. So could it be that ETFs are signaling the end of the cycle? And could these be weak hands? For now, I'll leave that question unanswered. It's time for an on-chain data review, and today I've prepared 6 metrics for you, with 4 of them being a review of how individual wallets behave depending on the specific Bitcoin balance they hold. We'll start with the smallest wallets, meaning those that hold any amount of Satoshi. And we can see that despite the declines we're currently observing on the charts, these wallets are still in an upward trend. So are retail investors buying? From what I see, definitely yes. At current prices, these are buying opportunities for them. How are wallets behaving that have at least 1 Bitcoin in their balance? Now let's notice that here the downward trajectory is very subtle, but still persists, with the difference that in recent days we've seen a slight uptick. Basically, since October 8th, we hit a certain bottom here, and now there's a slight rebound. We can't say that this is a lasting rebound or that it will actually result in strong growth, but it's worth noting that, above all, there is no breakdown here. When it comes to wallets with a balance of at least 1,000 Bitcoins or more, we can see that here there is also a slight downward trajectory, but it's by no means a radical one, so we absolutely can't talk about any strong sell-offs here or in fact about any end of the cycle. And then there are the largest whale wallets, which hold at least 10,000 Bitcoins in their balance. We can see that they reached their low point quite recently and were still at that level on October 12th. Since then, they've been in an upward trend. Along the way, we saw some slight sell-offs. There were a few of these wallets. When we started basically on October 12th, there were 83 of them, and now there are 87, so 4 more have appeared. And these wallets also are maintaining their status, and at least for now, we don't see them selling any Bitcoin. The next metric is NUPL, net unrealized profit and loss, which is essentially an indicator of critical deviations that, at least so far, has worked very well in determining whether Bitcoin is reaching the peak of its bull run or not. I will definitely be referencing this indicator, as well as other critical deviation indicators, on my Twitter and discussing them in detail when Bitcoin reaches those deviations. Currently, however, it's worth noting that Bitcoin is resetting here, coming out of this to a level of high optimism into that yellow area where very often we can see resets have occurred even in the current growth cycle. So what is happening right now does not differ from the standard behavior of this indicator, and much suggests that it is resetting in order to bounce back again soon. And also the Bitcoin balance on exchanges, which we regularly discuss. Let me remind you once again that in this case, for this indicator, we only take into account large cryptocurrency entities, only big, truly global brands. Exchange brands And we noticed last week that Bitcoin reached a certain local peak here, and it may currently be on a reversal trajectory, turning back and reducing the amount of Bitcoin on these major exchanges. However, it turns out that there was a spike here, but note that this spike was short-term, as we can see, and right now we are also seeing some pullback. This is an indicator that I personally will be watching very closely, because a decreasing amount of Bitcoin, especially on these major exchanges, may cause the price to spike. And now a quick summary of last week's contest, and the winner for the previous episode, at least the last one hosted by me, is Severin Drab, who analyzed Bitcoin. Congratulations, Severin. Please contact support to claim your 20 KNG. And that's all for today. If you enjoyed it, and deep down you know you did, be sure to leave a thumbs up and let me know. And please rate this episode from 1 to infinity, where 1 means it was just weak and infinity means it was fantastic. And maybe see you next time. Bye.